Hey guys, welcome back to another video by Fully Informed Trade, or Fi Trade for short, knowledge for everyone. My name is Alex Cho, and right now I'm going to be talking about Ford Motor Company. Ford Motor Company had a really awful day on the session. I think it fell by around 5% or something like that. Really hard to fall 5% on a session when the broader market indices go up by around 2% or something like that. Um, Main reason why this is happening is basically people are really worried about Ford's sales in Europe. Ford does have a lot of sales coming from Europe. They sell around 600,000 cars in Europe alone. In the first quarter of 2012, sales have been lagging a bit. It's because, and the main reason why it's lagging is because a lot of people are expecting the European Economic Zone to experience a Great Depression or something like that. If in the event you do have a depressionary economic event and it continues to negatively affect Europe, it's going to hurt international companies such as Ford, Honda, Toyota, General Motors, companies that make a lot of money selling products in Europe in general will be negatively exposed. And because of this negative exposure, people are selling the stock, anticipating falling sales or missed earnings guidance or something like that. I don't really think Ford represents, I think Europe does represent a large portion of Ford's sales. I think that at some points Ford will recover in valuation, but it's wise to anticipate this to happen maybe around $9 per share. But I think people have oversold the stock a bit too much, and it's better to just wait and sit back when trading Ford stock. But I think, again, Ford is a great company. They have great earnings. They're trading at extremely low valuations. The old metric score that came out for this stock, the last time I looked at it, was 9 out of 10. So it's extremely good in terms of old metrics, price to earnings growth, valuation, forward earnings growth. But basically, price relative to forward and current earnings is what the O metrics measures, and it scored very, very, very high on that metric. But even if it did score pretty high, and it is a high value, high growth stock, so it's relatively cheap relative to growth, people are expecting it to be negatively impacted by Europe. That's affecting the value of the stock. I don't think it's going to affect it too much. I still think it's relatively cheap. But because I think it's a value play, and I think people just want to beat up the stock for any reason whatsoever, it's just a good idea to wait on the sidelines and try to pick it up probably at around $9 per share. That would be a great area to pick it up, and it is below the 200, the 50, and 20-day moving average. So it could be depressed. It could be trading at depressed levels for many more months before it starts to recover. But overall, I like Ford at $9 per share. Once it gets down to that area, it could be a good idea to start picking up on some stock. And if you do, chances are it's probably going to work out. So we'll talk more about Ford Motor Company when it gets down to $9 per share. Whenever it does, if it does. But if it does, I'll release another video talking about Ford. And we'll talk more on Monday. And I hope you guys make money every single trading day of the year. So take care.